What a fun coincidence that you dropped in my channel here today. Can you introduce yourself for those that for some reason do not know you? I've never heard about you.
Sure thing. So I'm Kyle. I'm an operating partner at Openview. Openview is a venture capital firm investing in expansion stage software companies. And then in my role, I get to work with the portfolio companies around growing faster. So it's a great job. And based in Boston, have been in Boston for going on 15 years almost. And before Openview, I was in consulting for 6 years at a firm called Simon Kucher.
That's amazing. So I'm going to introduce you back to the audience now because everybody wants to know, like, who is Kyle to Leah? So I got to know you, I think, a couple of months ago, and the thing with you is that you're one of the only people that I follow that does a thorough analysis with numbers. And what I mean with that is that the majority of the stuff that we see on LinkedIn is very much, bubblegum advice. It's very surfacial, um, kind of on the strategic level. Even when I write, I usually do not disclose ARR numbers because, I'm also not working in an environment like you. But the thing that I really, really appreciate with you is that you're actionable, you have opinions, and you state them, even though that sometimes devolves into a fight in the LinkedIn comments, which is quite funny. Um,
And
but
you're part of that fight.
I, like I'm a girl. I like to start a little bit of the controversy, but no, it's all in good spirits, and I really appreciate that because that's I think in terms of the learnings or the ratio of post and the learnings that I have from you, you've given me a lot to think about because for me, the companies that I have worked with, just more recently, Small PDF, it's always also in kind of this size of companies that you analyze. And it was very interesting how you look at the market now in this downturn that we had since 1 year, especially since I'm coming from Europe. You predominantly still look more at American companies, but the same stuff has actually happened. So I really appreciate that in terms of the learnings and the insights that you have. It at least looks like like you have done your homework. At least it looks like that. So I really appreciate that.
Well, glad to hear it.
So I have two questions, which are more a little bit, how do you say, more on a fun level rather than a serious one. How would your friends describe you to the police if you went missing?
Hmm. Well, yeah, first I forgot to hope that they would describe me. They'd probably emphasize wearing glasses, drinking a cold brew, because I generally always have one in my hands, and pale. Yeah, those would be the top three characteristics.
Pale. Okay. Well,
I've got nice
aside,
friends.
yeah. Okay. Fair enough. Is the cold beer a Boston thing, or is that just a
Cold
Kyle
brew,
thing?
so like cold
Oh,
brew
cold
iced
beer.
coffee.
Oh, yeah. Okay, that makes much more sense. Got it. I thought you meant beer. Yeah.
Yeah, I'm always caffeinated, and until, yeah, and well, until 5 o'clock, and then yeah, maybe it's beer, maybe wine, maybe something stronger, but very caffeinated before that.
All right. And one of my favorite questions that I ask pretty much everyone is, what do people get wrong about you when they get to know you?
Yeah, I mean, it's a good question. It's something I was trying to think about the right answer. I think it's that people believe I have stronger convictions than I do have. Like see this people that maybe follow me on LinkedIn see posts of mine that like the ones you mentioned that have stirred up some controversy. And what they don't realize is that I often use LinkedIn as a way to test ideas, to kind of validate concepts that are kind of in the back of my brain that I haven't totally nailed my point of view on, but I have like an inclination of a point of view, and I'm looking for feedback. And I'm actually someone that just loves to explore ideas and brainstorm. But I always people always think that I come across as if I'm like so gung ho and so serious, and that it's like this is my uh like strongest held conviction in the world. And what they don't actually realize is that the opposite is often the case, even though I come across more strongly. And just as kind of part of that, my favorite hobby outside of work is actually going to see stand-up comedy. And
Hmm.
so I'm a very big fan of that kind of like approach, and try to actually take some of the principles that a stand-up comic takes around jokes and sort of working out jokes with an audience and apply that to thinking through how to grow a software company.
That is so funny. Now I have 2 points to this. So let's hope that I don't forget the second one while I talk about the first one. So the first one is I have a theory that if a post is getting engaged a lot by people, the amount of engagement that you get is somehow reinforcing the belief from people that you know what you're talking about. So I had this exact thing that you just described with the NPS recently. I had 1,200 engagements on this. And I just said, look, NPS is shit, right? I just put it out there. I was just like, okay, let's see what happens, right? Because I've never seen an NPS implementation that was solid. I never could use it. But it's not like, as you said, it's not like I wanted to die on this hill. But suddenly,
Exactly. Yeah, but sometimes those are the things that you become known for. Yeah, it's
yeah,
it's
suddenly I
risky.
have 70 shares. I don't know, 200 comments. People just sending me messages like, "What's going on with the NPS? Why shouldn't we use it?"
The NPS lobby is like canceling you in real time. Yeah.
Yeah. Yeah, it's quite funny because this happens all the time. And I think I can relate to this in some way because sometimes I also feel like because of who you are in a specific context. So let's say you're in a company relatively senior, because this happened to me also at my last company, where I started to become more senior. You know, people perceive you as more senior, but it doesn't mean that I change how I talk. Like I don't see myself in any way different. So in one all hands meeting, I just like I just in completely innocently dropped the word that I said. Oh, I hate roadmaps. I just said that. I don't know. I don't even remember it. But 3 or 4 people went to the CPO straight up afterwards and said, like, why did Leah say we don't do roadmaps anymore? We cannot work like this. Business analysis was going crazy. Everybody lost their mind. And it's just like it's just so funny because you start to learn that whoops, maybe I should not say certain things because people take them as gospel because I said them, even though I don't see myself this way. So I find that quite funny.
Yeah, it's an interesting balancing act, and for me, that's one thing I struggle with as well. But I do try to. I feel like I've learned a lot over the last few years, and I try to both, use things like LinkedIn as a way to create discussion, right? Like that's what it's there for. It's a social media. It should create conversation. It should spark people to be like, wait, this is a different point of view than what I've always been told or always heard of. And that's
Yeah,
what I think that's what people go to LinkedIn for, as opposed to being told this is exactly the answer of like the thing that I should do about the business. Like people are going to interpret that and kind of draw their own conclusions about what they should do. But at the same time, like if I were to say something with in front of the following that I've sort of gathered, there's real consequences if I put advice out there that is like genuinely bad advice or is the wrong
yeah,
thing to do. There's repercussions, and so trying to find that right balancing act is always
yeah.
tough. And you don't normally know if you've crossed the line until after you've crossed the line.
Yeah, that's true. I started to notice this when people start to drop comments where they tag another colleague and then they say like, "Hey, let's implement this." And I'm just like, "Guys, I just wrote this morning for like 15 minutes. Take it easy, right?" Like these frameworks that you sometimes drop. It's just like, "Yo, don't restructure your company on this, right?" Like it was just a thing. But you know, it's funny that you say that because do you remember or do you know what your highest performing posts are on LinkedIn? Like in terms of engagement, do you know which ones those are?
I don't. I don't know the exact figures. I don't have posts that tend to go. So I think with LinkedIn, for a lot of people, there's like hits where they maybe go like totally viral and get thousands of likes and whatever. Uh, I tend to not have ones that go totally viral. I have a lot that get a big audience and a few
Mhm.
hundred likes, lots of comments. But I tend to be more consistent as opposed to having hits, if that makes sense.
Yeah, no, that's fair. I think I don't have anything that's viral. It depends on what you would consider viral. But like there's posts sometimes with like 60,000 engagements and stuff. I don't have that either.
Oh yeah, I
But
never do that.
yeah, so like, but I think the most engaging ones, interestingly, now that you say it is that if you challenge something that people believe to always be true, and I had 2 of those. One of them was shitting on the NPS, right? I just said like NPS is a garbage metric, straight up. That's just what it is. I don't care whether you're from marketing or from product. I'm gonna fight for this, right? That's just what I said. And that went crazy. And the other one was about the Spotify squad model.
Mm.
And that was so interesting because I said, hey, you know who doesn't use the Spotify squad model? Spotify. I wrote this post 5 minutes before I was wheeled off into surgery in a hospital. No joke, right? I was bored on the hospital bed. I was just like, when are they coming? When are the nurses coming, right? And I wrote this and people went crazy for it. It's the first post that I've ever had that went, like through the roof in relative terms. And I think it's coming from the notion that maybe they have colleagues or they've just been always told this, but they didn't really understand it. Like, why should you do the squad model? Everybody's talking about it, so now I have to also agree. Like you sit on a table and you pretend that this is your opinion just so you belong there. I feel like this happens so many times in our industry
Mm.
where you just buy into it. You could literally make up a term, and if people like you and me are saying it enough, it's probably existing. And then everybody's like, yeah, yeah, we used to do that for 10 years. Yeah, sure.
Yeah, I mean, it is fascinating. I do think that the best performing things tend to be challenging the conventional wisdom,
Yeah.
ideally challenging it with something that is actually better, though, right? Like, if you challenge the conventional wisdom and have not made a good case for it,
Yeah.
um, you'll get a lot of slack for that, and I think like that's valid. Uh, but if you bring a point of view that people have maybe been like afraid to raise, but have been thinking like, I hate NPS. Have actually, I think I had a piece that went like somewhat viral around that topic too, because I similarly hate NPS for a variety of reasons.
Oh,
Uh,
nice. Friends.
it's or like I wrote something like that of like churn isn't a customer success problem; it's a company wide problem.
No.
Uh, and it just, not necessarily rocket science, but people will sometimes really feel strongly because they feel like they have this belief that they've been afraid to raise, and it kind of brings that validation that they're not alone in this perspective.
Yeah, that is so true. And I still have to say that I'm sometimes getting a little bit insecure when I genuinely piss people off. Because when you like, because this NPS is like, it's not something where people take it personally. I think people can still, like, they're like, no, no, I believe it's true. But when you say things like, I think you need to know SQL, otherwise you're not a good product manager, which is a post that I did at one point. It was a bit, it was a bit overemphasized, let's say that. I had a lot of mad people, like seriously mad, because they felt attacked. They're like, yeah, I haven't used SQL. I'm a great product manager. And I was like, no, you're not. And then, it's like, it starts going back
Mm.
and forth. And then I'm like, okay, now I went too far. I really went too far because people felt attacked, and it was really not okay. I mean, it did not serve any purpose. It was just a bit stupid in that sense. But the thing is, I think with your posts, and I would almost call them articles. For me, this is like the same thing that my father used to do when he was reading like I don't know, the New York Times, like the stock market or whatever. For me, there's like, okay, once a week or once a month, I dig it up, and then it's a big chance that one of your pieces is there, because I can read about these companies that were exactly in the size and what they were doing and what happened to the revenue and so forth. And the thing that I love about it so much is that you compare your stuff internally with the other stuff that you know. So because of how you conduct business in Openview, you have so many data points that I can then refer to. And obviously, this target group of people like me is quite small. But for us, it's very, very interesting. And that's what I think makes it so valuable, and also more of a long term, how do you say, like, most of your articles are still relevant today. I mean, it doesn't matter in a year. There's still, we're still having the same principles.
Yeah,
Maybe
I
we,
and I appreciate that. It's something that uh, for me. So I joined OpenView in 2016, and that was the
mm,
year my colleague Blake coined the term product-led growth. And I
yeah,
was not a PLG expert at that point. I was a pricing consultant before that.
mm,
But I've spent really the last 6+ years now trying to learn how the best PLG companies operate, what are the different practices, figuring out that a lot of these companies actually operate very differently, although there's some commonalities across them. But a lot of them have their own playbooks and their own approaches, their own org structures, their own metrics they track, and so on.
yeah,
Uh, and I get to work both within the OpenView portfolio and then just the broader community of software companies. And so, it's almost like I've been like an analyst at Gartner or Forrester for a while because I now have a lot of data points that I can reference across companies
Hmm.
around how they both operate now and how they've changed how they've operated. Because a lot of times, I think a mistake people make is they look to go copy something they see out in the world, but what
Yeah.
they don't realize is that that might actually be something the company's actively trying to change. That might be something the company has moved to from something else, and there's sort of context and history there. And so it's fun for me of just being able to get that pattern recognition over time.
Hmm. That's very interesting. Let's just really quickly dig into the business model of Openview. So, like, can you maybe describe in a couple of sentences what your business model is that you are getting into this point that you do have a portfolio of different companies? Like, what is your, who's your clients? How does your entire thing work? Like, who is coming to you? And
Yeah.
is, yeah.
Well, so summary, it's, venture capital firm.
Hmm.
Like that's our business model entirely. So we invest in companies, uh, like any other VC firm does, and then over time those companies have exits, they IPO, they get acquired, and so on. And so that's how we ultimately make money as a firm. And the specifics around the firm, and we've been around for about 15 plus years, is that we take a focused approach. So we're not investing in every kind of company across every kind of stage. We're specifically investing in expansion stage software companies. So the
Hmm.
way we think about it is companies that have found product market fit,
Hmm.
and are maybe have an initial set of like product to markets, an initial set of users, customers, and so on. They're really ready to scale and double down on their customer acquisition and their team in order to fuel their growth. And that's when we tend to like to invest. The letter tends to be, call it Series A, Series B, sometimes Series C. But the letter means less than seeing some of these same characteristics within the
Hmm.
companies. And it's kind of broad based across software companies. So we do invest in both PLG companies and non PLG companies, and we invest globally. We've got portfolio companies in the U.S., of course, but then Canada, South America, Australia, Israel, and so on. So the location doesn't matter as much to us. And then in
Yeah.
my role, I mean, I'm I don't sit on the investment side, so I'm not the person leading investments or proposing investments to our IC. I get to really be a partner with our portfolio companies, both the founders and then their executive teams, around helping them identify friction points in their growth model and help them come up with new ideas for how to scale even faster. And so that could be advising work that's kind of either shorter term or quick calls, getting them introduced to really great executives that could be helpful for them, or then actually working as a consultant and taking on consulting projects where we help them revamp pricing and packaging, revamp their PLG strategy, their onboarding funnel, their you name it. We
Yeah.
can kind of help them at the surface level or at a really deep level.
So that's very interesting to me in the sense that you said post product market fit, right? So let's say, so how does this usually work? Do you probably have a due diligence phase with any company that you invest in, as I would imagine on every, it's, I don't know, like, so let's say it's either for a convertible or it's in a financing round or whatever. How do you determine, or are you involved in this? How do you determine whether a company has actually reached product market fit? Because this is still for, this is not a scientific term. So, how do you determine whether something has reached the stage where they can scale, assuming that this means they need to have product market fit? How do you
Yeah, it's a
determine
great
that?
question. And this is something our investment team focuses on, but obviously I'm a part of the sausage making within the firm. So it's a little bit different for PLG companies versus enterprise specific companies. For companies selling more to like mid market enterprise customers, it's that we can talk to customers and we're hearing some consistency around what were the problems that led them to the product, what's their experience been implementing the product, what's been the value that they've seen from it, and do they have an intention of renewing and ideally expanding the scope of their purchase. So that those customer conversations really reveal either, oh, this is a one-off value proposition that's very bespoke with a lot of custom services for this specific customer example versus this is a very repeatable value proposition and a customer experience where the company is in a position to really scale and double down on this across a much broader market opportunity.
Yeah.
For PLG companies, companies can actually get to product market fit at an earlier point in revenue, right? So like if you're an enterprise focused company, you could get to 1 million in revenue with one customer, 5 customers, 10 customers, like a
Mm.
pretty small amount that each kind of like was their own snowflake. With a PLG business model, a lot of times you can look at free usage or relatively low dollar sizes, but across a lot of users. And so you look for product market fit more in terms of consistency around the product funnel. So finding scalable ways to attract more and more users to your website and to signing up for the product, seeing the usage retention rates once people have signed up. So are they actually reaching their aha moment, and then do they continue to use the product, week 2, week 3, week 4, and so on? And seeing consistency around ideally some sort of conversion from free to paid and expansion. So you might land with an individual user, but that user ultimately shares the product with other people, either internally or externally, to see signs that it continues to grow. But it's been fascinating that like one of our learnings as we've really thought more about PLG is just that we can get comfortable with PLG investments with different kinds of metrics and
Yeah.
different proof points than more traditional sales-led companies.
So I know that stage two capital is doing somewhat something similar, whether they focus also on, I think they're focusing also on PLG businesses, I think preferably. It doesn't matter. But like
We're
the
very
question
close with stage 2. Yep.
you oh you are. Oh, that's very good.
Yeah, the person who hired me at Openview, Liz Kane, is a partner there. So, yeah,
oh,
got
that's
a lot of
great.
shared DNA.
Yeah, tell her that Mark Robert should come on my podcast. Maybe I have to grow a little bit more, but like he never
Maybe you should
responds to
have
me.
Liz on your podcast.
Yeah, sure. I don't know her. Sure, bring her. I'm gonna take her. Like, if you still like me after this episode. So here's the point that I'm trying to make. So I know that Mark Roberge was a big proponent, and it's a very, very clever way of like, let's say you want to prepare for a funding round and you want to get OpenView on board. And let's say I have one of these companies and I want to convince you, Kyle, that I have product market fit. But if you just look at my numbers, you see that my 8 week retention is total garbage. It's like, I don't know, I push 5 million ARR, but I have like a 5 or 10% retention rate over 8 weeks, which is bad, right? This is really bad. So one of the concepts that Mark was really doing, which I really like, is like, okay, to split up your user base that you have and almost treat it like, okay, this kind of revenue does not exist for this particular purpose, because the ICPs that we have is maybe only worth 2 million, but they retain so well that we're going to scale that, right? So like we're completely ignoring the rest of the revenue that we have at the moment. Would this work with you if I came around and said like, look, Kyle, pushing 5 million, but only 2 of those are actually high retaining, but at least if I can convince you that we can scale this part of the business and we forget about the other 3, would you be okay with that?
So it's an interesting question. I think that there's some element for every company of really finding the way to tell the story around their business and their strategy in a way that there's always going to be like specific ways of looking at the data or specific ways of like telling the story around their business. That's just like a really important skill that every founder needs. And it's true at each stage. I mean, you even see it as companies prepare to go public, how they talk about their business and their segments, how they define net retention. It's actually different for just about every public company. So I do think that storytelling is important and can be influential. For this specific point that you raised, I guess I would look at it to say there's potential cherry picking where you were to say, hey,
Mm-hmm.
look, like if you just pick the best customers from any company, they're going to look good, and you could in theory
Yeah.
scale with these customers better than the other customers, and like you could try to use math to make your business look good, but it's actually really misleading. And then there's ways that you could say, hey, this is actually the truth. We're just helping you understand the mechanics of how we actually are purposefully operating. And so
Yeah.
for me to say that it's the truth, I'd want to see, has this pool of ICP users been growing as the company has focused on this segment? So are we attracting more and more of these users? Are we seeing better and better metrics as a result of attracting more of these users? And do we have a strategy to double down on this segment and use the funds from the investment to do that? You know, if that's all the case, then it all checks out, right? And it all
Yep.
makes sense and you can get aligned with it. And, for a lot of PLG companies, the way that looks in practice, by the way, is they've got maybe a B2C segment of their business that's individual users with personal use cases, student
Yep.
use cases, and so on. That's generally high churn and not was a great way of getting some initial traction and word of mouth adoption, but it's probably not where their business is going to scale. And they're going to scale more with teams and enterprises. And so I think with just about every PLG company, you end up having some of these stories that you tell to get investors comfortable with the long-term dynamics of the business. But generally for these companies, they're pairing not just the historical metrics kind of on its own. It's like this is the proof point. They're pairing that with what's their strategy to go get more teams or to turn their teams into
Yep.
enterprise deals with product-led sales, and they have a thoughtful plan in place.
I think that's a very good point. And the way that I'm structuring this usually when I advise companies, because I'm usually on the other side, like so I advise companies to get the money in the funding rounds, right? So the way that I have it in my head is usually that if you can prove for 4 months that you can sustain a specific acquisition or cohort, like I don't know, we're shifting the kind of customers that we are acquiring, and I can prove to you within 4 months, which is usually a long enough time. I don't know where I have it from, but like if you can prove for 4 months that these people retain really well with use cases that tend to be in the B2B segment, for instance, over your usual B2C customers, then you're going to push anyways um, LTV numbers that are very, very relevant. And this is the funniest thing. It's very, very rare. I only know from Grammarly, and I would love to hear this point from you. Um, I think I know the LTV of the average Grammarly customer. I'm not 100% sure. You don't need to disclose it if you have any knowledge about it. But I think Yuri was one of the advisors there at some point, or he was with Grammarly. But the thing is, in the last I've been in this industry for 22 years, and I've been starting to look at numbers, I don't know, 10 to 12 years ago. Like when you start to get into product management, that kind of stuff. It's very, very rare that you see any PLG business in B2C segments to go over an LTV of $100 with B2C customers, for instance. These numbers tend to be quite stable. It can be, you can go over it, right? But usually you're already dealing with professional use cases where you start to be like, as you said, teams. But then you're already in the B2B segment. Now you're in the lower B2B segment. You might be going up to $200, $300. It's really funny how by the LTV, that is a good, where you have a company with a good implementation, you can almost say like, okay, in which segment they are. Because there's just very rare products where you have team plans for B2C customers. It doesn't exist in this kind of thing unless you count social platforms to it. I don't know.
Yeah, sometimes, I mean, so it's a fair point. I do think that there are some companies that have built exceptional revenue models, even in B2C, where they get very high lifetime values. But in general, you're going to see, yes, a lot. There's a kind of an interesting distinction that I think you're raising around personal users who are individual users versus prosumer or professional users who are individual users. And they can look like they're both individual users. And so they can look the same at a surface level, but you're going to have a lot more LTV with that prosumer or
Yeah.
professional user because that's the group that can scale into the team and the enterprise plan in the future. And that's just someone that could maybe expense the purchase on the credit card or is less price sensitive given their role. And so one thing that we'll do is look at if we look at all user signups, could we signal folks that signed up with a personal Gmail domain versus a professional or non-Gmail domain, right? And use that as a proxy to look at the business. Or you could enrich the email signups with Clearbit or other services to get signals around the different kinds of profiles. So there's different ways I think of trying to segment the user base. I think it's a question that's coming up more and more as PLG companies scale because
No.
like anyone can sign up for a PLG product and so you're not sort of gating the access but then you have to understand from a founder perspective and then also from an investor perspective, like what's the underlying value of this user base.
Yeah, I think that's fair. And I made actually an article about this the other day where I was questioning whether we have a data blind spot when it comes to the LTV of lower B2B products. Like, okay, just to stay with me. So let's say I am with a company and I start, usually, let's say we have a 2 year, 2 to 3 year tenure as a company, right? I'm using Miro just as an example. And I use obviously my company address. After my tenure, I have to let go of that account. I have to, right? The account belongs to the company. All the boards that I created, everything goes away. I am not stopping to be a Miro user. The only thing that happens is let's say I'm not going to immediately transition to another company. I also do this right now. I'm now switching to a personal account because I love using Miro. In your data analysis, I'm still present as, Leah has been using this for 3 years with her business account. And now there's a second Leah, a completely different person now that's private, right? And then when I start a new job, then I get a professional account there. So I'm discontinuing my private one. I think, so I posted about this and someone told me that Figma is doing this, that you can sync your personal account with your professional one. I think it's Figma.
Mm.
In order to store your templates, your settings, and everything. So there's value for the user to do it, right? So you don't have to constantly migrate everything once you go between jobs. But this also covers this data question for them where you can not just say like, okay, per email that we have an LTV of so-and-so, but maybe there's a connection between tenures as well. Because I personally think that this is actually a good opportunity because I can think of a couple of softwares that I brought into a company because I was the first product manager at that time. So I'm defining the tool and I'm bringing it because I used it all the time, right? So why not monetize on this and then connect this also on the data? Now, I don't know how widespread this is, but I know that people are animals of habit. I am still using Photoshop just because I used it 20 years ago. And don't mock me. Don't mock me with this. I'm just saying I'm just still using it. And it's crazy. I know there's better products out there, but that's just what it is. I don't know. But I find it very
Yeah, there's an
interesting because,
interesting thread there. I mean, I think that uh, there's an interesting thread there to pull on. Like in a sales-led business, if your champion leaves to go to another company, the
yeah,
sales rep is obviously going to watch them, look on LinkedIn, see if their job changed, and then immediately reach out to prospect into them for that next deal. But what does that look like in a PLG context, and
yeah,
how do you continue to have that relationship? I think a lot of it for PLG, candidly, like a lot of it will be from a community perspective. And
mm,
so having people remain active as part of your community and thinking about your community as something that is more tied to the person as opposed to the account or the revenue. And so
yeah.
you'd still be part of the Miro community as a person, even if you change jobs. And that's how they can continue to engage you.
Yeah, kind of. I've never been part of the Miro community. I never submitted a template or anything. I never engaged with anything. I did have a talk with Varun Parmar at some point, the CPO, which was quite funny, but that's a story for another day. But other than that, I don't know. I feel like there's some potential there. There really is. Because the cost of migration is gone as soon as I leave the company, right? So, like when you're in a team and you have the entire company on board, you're not going to change tools. But when you leave the company and the team, then you're now ready for a new tool. And that's where I think we should maybe try to retain people. I don't know.
Yeah, there's a thread there for PLG companies, especially, I mean,
Yeah.
because churn, as you pointed out, churn is much higher typically in PLG companies than
Yeah.
traditional B2B software companies. And so some of that churn is that your, you know, your user for whatever reason wasn't seeing value, wasn't using the product enough. Like it was churn that uh, was called like preventable, right? And then some of the churn is that someone left their job or the business closed or it's like non-actionable churn, but it actually might be actionable churn because if you
Yeah.
think of it as like tied to a person as opposed to tied to the person's specific job, you're kind of continuing to have that relationship with the user. So it's an interesting thread to pull on.
It's funny because it's difficult at the same time because the person that has the contract with you as a service provider is the company. Now you cannot go to the company and say like, "Hey, tell me when that employee leaves." so I can incentivize them when they go to the next company that they're going to book us again. Um, and then there's the security concerns and all that garbage, of course. But like, I think that's quite interesting. So let me ask you a question then. So did you ever invest into companies that are post Series A or B that had absolutely no revenue?
So we've done Series A investments that were essentially no revenue,
Mm-hmm.
but I don't think we've done any sort of Series B or beyond
No.
at that point.
What would be a typical business without revenue, um, that you would say like we're going to do that? Is that typically? I mean, it's probably not a PLG business, but what would be a typical business where you can? I mean, I don't know whether you can speak about it, but I would be quite interested in like what is a typical company structure like that does not push revenue but still gets a good evaluation.
Yeah, well, I mean, even just like if I put my not if I take my OpenView hat off and think in general, there's gonna be companies that have a really interesting technology wedge. Maybe it's an open source technology that they're building that can get a massive community of open source users, or there's something really special about what they're building that requires a lot of engineers, developers, just because that's going to be a huge part of their competitive advantage. And so if you believe enough in the market opportunity, the team, um, and so on, then you'd be comfortable investing, in subsequent
Yeah,
rounds because you're betting on a combination of the technology and the like open source community around the technology.
yeah,
And so I think that's a very like valid, viable path. It's in some ways there's PLG elements there, but not always. Then there's another group that of PLG products that I would call it of like more classic PLG products where they have the potential to monetize, they just haven't yet. And so they've focused on a really fantastic product experience, self-serve user onboarding, fast time to value. And so they found ways to attract lots of users, generally like thousands, tens of thousands, or hundreds of thousands of users, and their
mm,
cohorts of users are growing month over month. So like growth is really showing this like sort of viral trajectory. And you can look at data to see these aren't just users who are signing up, but these are users who are signing up, seeing real value in the product, and they continue to stick around and keep using the product after they've signed up, and ideally even show that they're bringing other people in through either viral loops or word of mouth, and that's part of what leads to kind of accelerating user signups. And then when you talk to these free users, ideally you could get a sense that these folks would be willing to pay for the service as soon as monetization is turned on. It just hasn't been turned on yet. And so that would be like a classic PLG company that is
yeah.
pre-revenue that would still be very compelling around like raising that Series A or maybe even a Series B to the right investor.
Yeah, so I'm having my skeptical face on at the moment. So for
Well, things have changed market wise, right? Like I'm also talking about, the market looked very different for these companies in
sure.
2021 than right now.
No, I'm with you. But the thing that I always wonder is that, I mean, there's a specific valuation that you have to put on some business to determine, okay, what is a 10% stake in this company worth? Is this worth Kyle's time that we put him on there because we believe that the business can scale? And that's the thing, right? Like these numbers that we put to companies, like, okay, you're going to get now a 20 million evaluation for this particular round, whatever. They're coming from somewhere. And I kind of understand in my rational brain where it comes from. Once you have revenue, we have something comparative, but especially moonshot companies that have exactly where you said, like, okay, like you don't have monetization put on it. You still need to decide on a number how much this business is worth right now, right?
Well,
And
so and
that's
it's
quite fascinating.
what I mean, there's a lot of people that invest in companies like pre-seed investors, seed investors that are investing right pre-revenue. It's actually quite common in investing, and what tends to happen is folks build out an outcomes analysis of what are potential outcomes that they would envision
You know,
where the business could get to in 5 years or so, or like people are going to have different time horizons, right? What's the revenue that they'll be in 5 years, and then at different multiple scenarios, like what is the valuation in that period? And then you can work back to say, what do you estimate is the probability that folks will be able to achieve certain outcomes? And that's where, there can be a lot of different interpretations, right? And different VCs will have their own different interpretations, and they'll look into the quality of the technology, the market opportunity,
Yeah.
the competitive landscape, the founder fit. If it was a multi-time founder, is this the right founder for this kind of business? A lot of that kind of feeling will come into play, but then you're underwriting too. So VCs and other investors will look to have a certain return threshold where the probability weighted expected
Sure.
value
Yeah.
is
Yeah.
X times what the current value is. So if you had that 3x, so you're looking for a 3x for all of your investments, you might say, hey, if there's let's do the math. Let's say a binary outcome. The company's either worth a billion in 5 years or zero. And we think there's a 10% chance they're going to be worth a
Yeah.
billion. That means the probability weighted expected value is 100 million. And if you're looking for a 3x, you'd be willing to invest at a valuation of, call it, up to 33 million for it, right? But probably no more than that, because then it would not meet your threshold. Now, all of that is like kind of theoretical, and there's a lot of different interpretations that will go into it. But that's kind of like the calculus at a high level that folks use to make some
Yeah,
of
no,
these
no, no,
decisions.
absolutely. And I've done my M&As as well, but the thing is in my head still, like, because if I have to do it myself, and you usually also want to defend as a business that you're more worth than someone is saying, right? And so forth. I mean, it's just a minefield sometimes in these funding rounds that some companies do not anticipate, like especially startups that got lucky stupidly, like, but they're not really experienced in this entire world. They take on, I don't know, like a 15% stake by VC, but now they have a seat on the table, they lose voting rights, that kind of stuff. Seen everything. The thing that I have in my mind is usually, so when I make a business case, and it doesn't matter whether it is for a big feature in a big company, let's say we're going to push the ARR by 10% in the next year if we're building this, or whether it's an M&A, is always the same. I take 3 colored post-its on the Miro, and they're green, they're yellow, and then they're red. Red usually means whatever I'm going to put on there, I have no idea about. I'm just going to pull it out of my wherever, right? And yellow is usually, okay, I have some indication that this might be true because I can compare it to something. And green is usually numbers where you have proof, like revenue numbers, bookings, that kind of stuff, realized value, and so forth. So, but I find it quite interesting because, as you said, it's just a matter of interpretation, and the interpretations can be wildly different. And yeah, I don't know where I'm going with this, but I just find business cases and valuations of companies a very fascinating thing because
Yeah,
it's
maybe we
very,
need more
very
product
difficult.
managers to be VCs.
Well, I think I make my money like this, right? Like, I mean, people hire me, so I defend them in front of funding rounds. So that's also good. I mean, I'm not their lawyer in any way, but I kind of try to surface what's good, right? Like, we try to shape them up and like find retention. But I mean, to your original point before, it's quite interesting because there's still this notion that revenue is the most important thing. And while I don't disagree in some way, because it's a strong proof that you can do something, it can make sense even in the last months before you go and plan and go out for a funding round that you put out these team use cases for your existing users. And if you prove to me that you can convert 15% of your existing user base to team users, then I know that your LTV is most likely also going to accelerate, or not accelerate, but like expand. And an investor that is good and that's worth their money will probably see it. And that was
Yeah,
my last
well,
asterisk to that.
I mean, in every company at different stages as they grow, there's an investment thesis, essentially. What's the reason why,
Yeah.
like, what's the positive case for why this company succeeds? And then there's the investment risks. And generally, for a company to go from seed to A to B to C, you're taking some of the risks off the table because they've proven out that
Yeah.
that's no longer a risk, right? And so part of what I think for every business, it's like there's going to be a revenue component of the thesis and the risks, but there's actually maybe other underlying drivers. And so a lot of the reason why people look at revenue is they want to see that there's not just a need for the product, but there's a willingness to pay for it, right? But if you
Mm.
could prove out that there's a willingness to pay for the product by surveying users about what they would be willing to pay, or there's some other methodologies you can get into, you can say, hey, I'm actually not that concerned about this investment risk. You're not going to totally strike it out because it's still there, but you can get comfortable with the investment kind of
Yeah.
independent of that risk. And I think that that's where there's just so much that goes into really great investors in the way they kind of unpack and understand different business models.
Yeah, and I think maybe my closing remark to this, because I agree, is that this is the biggest shift that we've had in the last 15 years, I would say, to now where everything is getting commoditized, right? SaaS is just commoditizing everything. You have multiple choices between lots of different solutions. You're actually putting a price on customer success. And that's really great, right? Like some signals are actually almost as much worth as revenue. Like people are just in general, the generation that is coming up now is much more literate on this stuff. I did not know what LTV is when I was 25. I can guarantee you that. That's a long time ago. And it's just fascinating how much more visibility we have, I think, into business models. It's not just anymore this dusty thing that the people are doing with the ties. I mean, no offense if you're wearing a tie, but you know what I mean, right? Like it's become much more of a, like, we're learning together. It content that you put out as well is very transparent and understandable, I think, for normal people. I mean, I don't there's yeah, you know what I mean, right? Like
Are you calling
it's be-
yourself normal?
no, I was looking for
No,
the
just giving you a hard time. I do think I think that you're both. I would agree that like there's I think a lot more literacy around business models and how companies operate.
yeah.
But there's also still like I think a lot of work that individuals at companies should do to even understand their own company's business model and the investment thesis around their own company where they work at. So if you're a product manager at a Series A company, do you understand like the investor's thesis on the business and the risks
Yeah.
involved? Do you understand what are the KPIs that investors are going to look at to say, whether the company is really attractive for a Series B or Series C? Um, there's I think there's still more to be done there,
Well,
candidly. But
much more.
I think that part of the, if I put my like rose-colored glasses on, positive side is that given the current economic conditions, people are very hesitant to go to a company that they don't have confidence in, right? People are very concerned about whether it's layoffs or just the value of their stock options going to zero. So I think people are asking harder and better questions
Yeah.
when they're and really doing more evaluation when deciding what company to go join, and that leads to a kind of better alignment around business model.
So this actually reminds me of something that I wanted to talk to you about really quick, because this is going to be one of my last points. So you posted the other day, I think it was you. You posted the other day, why are PLGs something like with the numbers that they're not necessarily more profitable at the moment than sales-led companies. It was something around these lines. And my initial reaction, I also posted this, I think, as an answer, was that, well, no company that I know of, all the startups that have been founded in the past, whenever, 10 to 20 years, where I had a closer look into, none of these companies were like, hey, when we reach a profitability of, I don't know, 800,000 per employee, we're going to be successful and be done. All of these companies, when they went above a specific threshold, started to invest their money more. That was just the name of the game. And I think that's one of the reasons as well why PLG inherently is not necessarily more profitable if you're looking at it from that perspective, because if you make more money than you actually pay in a specific ratio, then you will always invest it, because that's what people say, right? Especially in a
Yep.
market upturn. And that's, I think, and I think that the key question there will be like, what is happening when you downsize the core size of the business? And that's where I think PLG will shine. So my prediction is for the market, and that's now the question then back to you as well. But like my predictions for the market, maybe PLG is more sustainable on a skeleton crew, if I can say it this nasty,
Yep. Oh, for sure. Yep.
than sales led business, because the CAC for one salesperson is just going to be much more, it's harder to optimize CAC for a sales led business than you do for a PLG business. So, where do you see
Yeah.
this going?
Well, I think yeah. So I mean, that's one of the like beliefs with PLG, right? Fundamentally, is you're delaboring the sales and marketing motion. So you're taking things that would normally have to be done by people, and more of that work is automated into the product, which drives a hopefully a better customer experience, a consistent customer experience, and not having to pay people to do things that the product could actually take on itself. And so you could see that as for a lot of software companies, they have big teams that do outbound cold calling and business development to generate the lead. Then you have a separate team that does, it's AE for closing deals. You have sales engineers and implementation consultants to onboard customers, right? You've got customer success being very involved. If
Yeah.
all of that could be moved into a self-service motion, plus, a lean product-led sales team or a lean customer success team, a PLG company in theory can be much more profitable, much more efficient than their comparable peer. But I think what's happened, and Tom Tungas is actually the one who's shined a light on the data here.
Mm-hmm.
Recently, PLG companies that are public have uh, are showing that they're growing still as fast as their sales-led peers, or maybe slightly faster, but they're spending more money to do that, and they're spending more as a percentage of revenue on both
Yeah.
R&D, which makes sense because it's product-led growth, so the product kind of fuels your growth. But they're also spending at least as much money on sales and marketing, which is counterintuitive because it means that PLG isn't working in practice the way in theory it should be working. And I agree that a lot of it comes down to companies before being so valued based on growth that a lot of companies made incremental investments to try to fuel faster growth. And as long as the overall business model made sense and the company was growing, that was fine. And now there's going to be a lot more scrutiny around, are these investments actually paying off? Are they at our investment hurdle? Now that capital is harder to come by, we're going to have
Yeah.
to just make some of these trade-offs that have been that we put off maybe for a while. But I think the positive angle is that PLG companies will be in a good position regardless of where the market goes. If the market values profitability, PLG companies will actually be well positioned. But if market values growth, PLG companies will also be in a good position.
Yeah. I think I agree with this, and we're almost at time. And I think you already kind of answered already the question, like where do you see the trends going? But do you have anything else where you feel like that's gonna hit us in the face in the next 5 years, in any way in this area?
uh, yeah, I mean, I guess for me, we've been talking a lot about product-led sales as a PLG community and trying to find the right balance between kind of people-led go-to-market teams and the product and product-led growth. And I think that there's just a lot to unpack there. Like I think we're still working through what that future looks like. It's exciting because of all of the innovation happening, but I'm not yet seeing like maturity or repeatability across companies. And I'm
No.
seeing a lot of companies kind of struggling to figure out what that right motion looks like. A lot of companies still have, they look like they're PLG companies, but they have a sales rep assigned to every user who signs up, even if it's a personal user in the end, right? So there's a
Yeah.
lot of a lot of sophistication that needs to happen around that space in particular. And then otherwise, one thing I've learned is that it's very hard to predict what the future holds in software and in PLG. And so I'm excited to kind of study the trends, study what the best companies are doing, and then hopefully, share that knowledge out with other folks.
Yeah, we'll definitely do that both, I hope. I think you will be on a more analytical level, and I'm looking forward to it, to opening up my browser in the morning and read your stuff. Thank you so much. I think we have to close it here. So I think this podcast was 3 hours, not long enough. So like I would have liked to extend it for another 3 hours. So thank you so much for being on it and for sharing all your views. It was very, very insightful.
Yeah, thanks for having me on.